Hello and good day. This is the analysis of the EURUSD currency pair for December 29th, 2025. As predicted, the price has entered a downward phase, and with the start of Monday, we can see that it has been accompanied by selling pressure. And below this range, a candle closed as an order block. However, it failed to break out and re-entered the range, which has formed a swing failure pattern strategy. Here, this has formed for us, and we can consider this entire range as significant accumulation and the lower part as manipulation. And finally, anticipate for a significant distribution move to occur in the overall market. It is anticipated that if the price moves upward with displacement and bullish momentum, it could trend higher. If the bullish move continues, it may break through to the buy side, collect this trend line, and reach this range. It could then react to the daily order block and the refined 4-hour zone and experience a correction in this section. If the momentum increases, it could enter this area. This area is the daily and refined 4-hour zone, and after that, it could enter a bearish phase. However, if it is not accompanied by displacement and bullish momentum, it could continue its downward bearish trend. The important zones we have in its bearish trend include a daily FVG zone refined to 4 levels, and ultimately, the liquidity present in the sell side area. This is the weekly FVG zone refined to daily and 4 levels. It is located here, and it could move downward and collect the liquidity in this area. But with fundamental analysis of the Euro and USD, we can see that the Eurozone's strength is increasing. Compared to the USD index, which is declining, this could push the price upward. It could collect the liquidity on the external side, and after that, move downward to gather more liquidity. It also collects the liquidity on the external side in this section, and after that, we can update our analysis. On the 1-hour time frame as well, we can clearly see that the price resides within a downward channel. In this area, there is an FVG zone and an order block from which the price could move downward. It collects the buy side and external liquidity here. It has collected them, and if it enters a bearish phase, we can use this area, either the FVG zone located here or this order block candle in this section, as an entry point for a trade and execute a buy-side position targeting these levels. We can consider the channel and use this opportunity to enter a trade, which would be the entry level for the trade at the order block level and this FVG zone with the stop loss behind the order block candle or the swing located here. However, it's not recommended. We can place the stop loss in this area, set it, and finally place our take profit at the first swing, the second swing, with a risk-reward ratio of 1 to 2, and so on. And finally, we can target the third swing, which gives us a risk-reward ratio from 1 to 2 up to 1 to 4 in this trade. Wishing you success in profitable trades.